Hello students, in this lecture I am going to discuss the concept of goods returned and how to pass journal entry for the same. There are two cases of goods returned, dear students. The first is I would like to start with a transaction, financial transaction regarding the same. Goods returned to Sonu for rupees 5,000. This is the first case. And second is goods returned by J for rupees 3,000. So there are two transactions, opposite transactions. So what is their meaning and how to pass journal entry for these? Let's discuss that. The first one is goods returned to Sonu for rupees 5,000. Who returned the goods? It means we returned the goods. Which goods? Which we earlier purchased from Sonu. On account of some defects, these goods are returned. It means in the past, few days back, we must have purchased some goods from Sonu. So it is part of purchase. It means simply, firstly we purchase the goods. You know that it is for understanding purpose. When goods are purchased, these are put into purchases account, and purchase is what? It is an expense. You have to understand this from accounting point of view so that the entry is completely understood. Purchases is an expense, it's a nominal account, and that's why it is debited. And the part of purchases which had some defect, we returned back to the suppliers. That is termed as purchases return. Remember this, students, this is purchases return, or you can write purchase return. This is purchase return. It means purchase return is just reverse of purchases. Purchases account is debited and then purchase return account is credited. But why? Because purchase return refers to the reduction in expenses. Purchase is an expense which is made for generating revenue, because later on these purchases are converted into sales. But the part of purchases which is returned to the suppliers cannot be converted into revenue, cannot be converted into sales. That's why purchase return is termed as reduction in expenses, decrease in expenses. And there is a rule, dear students, understand that what is the nature of expenses. If there is an increase in expenses, these are debited. If there is a decrease in expenses, these are credited. And this is decrease in expenses. Purchase return results into decrease in expenses. So what will be the journal entries accordingly? I told you purchase account is debited and purchase return is reverse of that, so that's why it will be credited. So to whom we returned the goods? We returned the goods to Sonu. So our journal entry will be Sonu debit, debit the receiver 5,000. Sonu is our supplier, Sonu is our creditor. When we purchase goods from the suppliers, there is an increase in creditors, there is an increase in liability. And when some part of goods are returned back, it also results into decrease in liability, and decrease in liability is debited. Understand this. And on the other hand, debit the receiver, and Sonu is receiving 5,000 goods worth rupees 5,000 to purchase return account, to purchase return account. So this is the journal entry for purchase return, dear students. Briefly, I repeat it again. This is purchase return, and purchase return results into decrease in expenses. That's why it is credited. And the supplier to whom goods are returned, his account is debited due to two reasons. Number one, debit the receiver, he is a personal account. Number two, if you are not satisfied with the first, number two, it results into decrease in liabilities. Now coming to the second one, dear students, what is this? Goods returned by J. Who is J? J is our customer to whom we must have sold some goods. But on account of some defect, he returned the goods worth rupees 3000. Remember one thing, when the goods are sold, when the goods are sold, we maintain sales account, and sales account is credited. Why the sales account is credited? Because it is revenue. It is revenue. It is main source of income of the business. It means increase in revenue is always credited, and this is credited to sales account when goods are sold. And when some part of the goods sold are returned by the customer, that is termed as sales return. This is termed as sales return. See, goods returned by J, it means J returned goods worth rupees 3000. This is termed as sales return. And sales return is what? Results into decrease in. This results into decrease in revenue of the business, income of the business in simple terms. And you know that when revenue or income increase, it is credited. I write it here for better understanding. What is the rule applicable to income and revenue? Increase in income and revenue is credited, and decrease in income and revenue is debited. And here income is decreasing on account of goods returned by the customer J. So sales return account is debited, friends. Here this account will be debited. Now what will be the journal entries? Let us see. And one more thing, sale is always credited, keep that in mind, because it is a nominal account. Credit all income and gains, and sales return is just reversal of sales account credited, so sales return account, obviously this account will be debited. Now what will be the journal entry? Let's see the journal entry. There are two accounts. One is J. J is our customer. And second account is sales return. Sales return is decrease in income, decrease in revenue of the business. So when J, the customer who returned the goods, this results into decrease in assets of the business, because J is our debtor also. When we sold goods on credits to someone, the person becomes our debtor, and debtor is an asset. When the person returned the goods, this is decrease in asset, decrease in debtor. That's why it will be credited, and sales return account will be debited, because it results into decrease in revenue. Now what will be the journal entry? Journal entry will be sales return account debit 3000 to J, 3000. And second aspect of thinking is J is a personal account. Credit the giver. He is returning the goods. He is giving the goods. Since he is a giver, his account will be credited. Purchase returned is termed as return outward. Outward. Because in case of purchase return, the goods is going out, that is termed as return outward, and sales return, goods coming in, it is termed as return inward. Return inward. So students, this is the concept of goods returned here to the supplier and here to the customer, which is termed as purchase return, and this is the case of sales return. I hope the concept is clear to you. Now you will be able to pass journal entry. But remember one thing, if these transactions are taking place at a trade discount, do not forget to adjust the trade discount, to deduct the trade discount. Share the video with your friends and classmates. Subscribe the channel if not yet subscribed. And if you want to understand the same topic in Hindi, then visit and watch my another channel, that is Commerce with Difference.